Good evening, friends. Hope you are able to hear me. Okay. We'll start the session. So I would like to open a big pen. Okay, fine. We'll start with the session. So I would like to recall. Okay. First of all, I would like to welcome you all for the session, and thanks for joining on time. So today I'm going to discuss about exploratory data analysis, which is on stock market as well as trading. Okay. So I would like to recall what we have discussed so far. So the first hour in the first very beginning, first hour, day one. So we have started discussing about the applications of machine learning as well as AI for trade analytics or analysis. And the second hour, the day two. So we have understood what is the CRISP MLQ and what are the different data analytics steps. So that is 4 data analytics steps and 7 CRISP MLQ steps. And the next hour, we concentrated on, that is today. So next, the third, I'm sorry, that is, so this is 1 hour a day. So this is 1 hour a day. So here today, we are going to understand EDA. So this EDA is part of a step that is CRISP MLQ. So under CRISP MLQ, we have a business understanding and data understanding. The first step. The second step is data preparation and data cleaning. And the third step is model selection. And the fourth step is model evaluation. And the fifth step is deployment. And the sixth step is monitoring and maintenance. So these 6 steps are major important under CRISP MLQ. So here the contribution of data preparing, which is in the raw format, before sending it to the model is more important. So that step, understanding the data, and exploring the insights from the data are the 2 important steps that we need to do it. So based your model performance, decision making, prediction, analysis, everything will be done based on your data. How far your data is talking to you and giving you the information. So then you will be understanding the portion of the decision and making it more simple in delivering, understanding, and whatever steps that you want to take is all about helping to your future things. So let me quickly go with the exploratory data analysis. So in this, we have understood some of the steps, which is very important. So under this, we have followed five different steps. That is, first is measure of central tendency. So I'll explain what it is. And the measure of dispersion and the skewness and kurtosis and graphical representation. So graphical representation is also a part of exploratory data analysis, because when something is not understood by calculations portion, we can understand from the graphical representation. Let me give you a simple example that this is a x-axis and this is with respect to years 2002 to 2022. So let me take that we have taken the data with respect to the trade or the stock shares trades, or we call it as volumes. So we'll plot this with respect to the years and we'll see that there is a variations. So you can see that the value of y is not constant. So it is varying. So what is this variation? How much it is getting varied? So this is giving me to understand on what rate or which year it is getting hike, and during this duration range of time, whether it is increased or decreased or remain constant. So that we are going to understand. So when the data is huge and it is very big, that is big data, then you might go wrong in understanding the graphical representation, because it will be more data. So maybe you'll be getting more overlaps, and you'll be having things to understand, uh, not very much understanding from the data. So it's not so clear from the data. Let's say example, if I give this data and everything is here and it is messy, so can you able to understand? So it is not good to understand here. This the data is like this variations. So this data is unable to understand. So for that, what we'll do, we'll just move towards the calculations portion, the calculations part. So from this calculation, we'll get the values and we'll try to understand what is these values talking all about with respect to the data, what we have. So for that, we need to make sure that we have arranged the data in a proper format and understand what the data is trying to tell. Because when we have the data, so data is trying to tell something. So data is trying to tell something. So I'll be giving you one simple example that, let's say example, we have here number of hours and the x-axis, y-axis is score. So 2, 4, 6, 8, 10, and this is a value. So I read for 2 hours, 4 hours, 6 hours, 8 hours, and 10 hours. So your graph will increase like this, telling that you will be getting more marks. So whenever you study for number of hours, so the data is more clear that if you study for 1 hour, you will not score. If you study for 2 hours, you will not score. If you want to score more than 50, you need to study for more than 6 hours. So greater than 6 hours will be getting more marks. So this is what we understood from the graph. So it is always simple to understand from the graph, but when the data is used, we are not able to understand. So what we'll do, we'll just do with the calculations portions. And that is with respect to whatever the model we are supposed to try with it. Because the data may be continuous, the data may be discrete, or it can be of categorical data. So at that time, we'll use different models, and different models have different calculations. Hence, we will try to understand the data better. So this is all about that you are going to understand. The first moment business decision, the second moment business decision, the third moment business decision, the fourth moment, and the graphical representation. So we are understanding today with this portion. And what is first moment business decision? So I told you measures of central tendency, the mean, the median, and the mode. So when there is a data, so the data is telling all about some calculations or some part of it in the sense is the information. Let's say example, here we have number of children, and here the chocolates. Let's say example, I have 15 chocolates, and there are about 5 children. So when I want to give this chocolate to divide it to 5 children, 1, 2, 3, 4, 5, each one will get 3 chocolates. So total 3, that is 15. So this is equal distribution. Equal distribution. So there is no variation, there is no something like that. When I say that I am very much liking second child, and I'll be giving 4, and I'll be cutting short with the first child. And when I say, I'll be writing here. So sorry that number of children, I'll write once again, and the number of chocolates, 1, 2, 3, 4, and 5. So I like the most with the first child, second child, and I'll give 6 chocolates, 2 chocolates, and 3 chocolates, and 4 chocolate, and again 3 chocolates. 10, 13, 16, 18. 18 chocolates have been distributed to the 5 children. Now, 18 chocolates are distributed to 5. Okay, let it be 6, and I'll add. Okay, so I'll just erase this, and I'll again write this as 2 and 2. So how many it is? 2, 2, 4, 6, 12, 15, and 3. Okay. So now 18 chocolates has been distributed to 6 children. What will be the average that a child should get? So 18 divided by 6 becomes 3. So each child should get at least 3. That is an average chocolate that each child should get. So when I say average chocolate that each child should get, so this is a 3 and this is a 3, but here they are getting 2, and here 2, here 2, but whereas the second child is getting more. Okay, so this is how we calculate mean value. So there is a distribution error that is not normally equally distributed. Okay, so now I'll just calculate what will be the median. What will be the median? The median is the value which is first sorted in ascending order and then take the middle element. So this is a procedure to calculate the median. Now I'll just sort it in the ascending order: 2, 2, 2, and 3, 3, 6. So 3 elements, 3 elements. So 2 elements, 2 elements. So 3 and 2. So 3 plus 2 divided by 2. So it is 2.5. So almost the median value will be 2.5. So median will be 2.5. When the median is 2.5, you need to check, cross verify whether they are getting or not. So you can see that the mean value and the median value are almost same. This is 3 and this is almost 3, that is 2.5. So you can estimate from this, what we can understand is the mean and median are almost same, means there is no outlier. So think that when I say, let me say that I like the third person, and I like the third person, and I gave 15 chocolates, and there is no chocolate. So 2 chocolates, 3 chocolates, 4 chocolates. So now if you calculate mean and median, it will be different. So let us assume that let me erase all this and then clearly write. So I have 4 children and I have distributed 50 chocolates to this child, and 2, and this 3, and this 4. So 2 plus 3, 5, 5 plus 4, 9, 59. So I'll be just giving this and making it as 60. So I have distributed 60 chocolates to 4 children. At least each should get 15. But here you can see that the second child, third child, and fourth child, they are getting not equal to, almost equal to this mean value. So since one is getting more. So what is the mean value? The mean value is 15. Now what is median value? The median value is 2, 3, 4, and 50. Okay. So the center element is 3 plus 4 divided by 2. That is 7 by 2. That is 3.5. So you're getting median value is 3.5. Earlier, we have seen that it has been equally distributed. So we were getting 3 and 2.5. Almost equal, we can say. But still there is a variation, 3 and 2.5. Here you can see that where is 3.5 and where is 15. So there is a large difference. So with the help of mean and median, we can identify that there is an outlier. There is an outlier, that is extreme values. There is an extreme values. So mean and median calculations is so important to understand the data. When the data is numerical data. So I'm not talking about the other data when the value is numerical data. To check, to cross verify the data, whether it is normally distributed, having any outliers, we can calculate. So this is an imbalance. It is not balanced data, it is imbalanced data. It is not equally distributed. And the mode, we don't use much of the time mode because the mode is number of repetitions here. So I'll just say I've written 2, 2, 3, 3, 6. So here 3 and 2 has been repeated twice. So we call it as bimodal. So when you have one value, let's say example, you have another 2. So your more repeated values is 2. The mode will be 2. So if you have one element as repeated more times, mode will be 2. When you have two elements, let's say example 3 I have written and 3 and 2 are repeated, then you will say bimodal. So bimodal and unimodal, you can say. So this is the importance of measure of central tendency when you have numerical data. So now when you have a data and you'll just need to calculate the variance of it. So how do you calculate the variance? What is the formula for variance? So you know the mean value. So sigma divided mean value divided by n. So x bar equals to the variance. So standard deviation, square root of variance is referred to be as standard deviation. Sigma. So range is with respect to minimum and maximum. You find the distance between minimum and maximum. So mean value, we'll say it is as mu, and it is given by sigma xi divided by n. That is what I've written. And the variance, that is a mean value, and this is a variance. So variance is given by sigma square. Sigma square is equal to summation of xi minus mu whole square divided by n. So standard deviation is given by the root of whatever you find out, sigma xi minus mu whole square divided by n. Okay, so these are the some of the formulas that is calculating with respect to any variations in the or any deviation in the data. So when I say variations and deviations, that nothing but the data is not normally distributed. So normal distribution, we have different kinds of probabilities, statistics, concept. So there comes probabilities, which will be having a distribution concept, and the normal distribution, the Poisson distribution, the binomial distribution, the Bernoulli distribution. So like this, if you have a data, with respect to the data, you have different distributions. Okay. Now, so moving on to the next, we have the skewness, the negative skewness, positive skewness, and if skewness is 0, then it is normal distribution. So all these are making it to understand the data. Let's say example I've written like this. So this is a mean, and this is 1, 2, and 3. So this is +1, +2, and this is +3. So it is moving towards left side. It becomes -1, -2, and -3. So when you have a data that has been distributed from here till here, I'll be having a data that has been distributed normally. So this is normal distribution. So when the mean value is 0 and the sigma is 1, then you say that it is normally distributed. Where here the mean, median, and the mode, everything will be same in the center position. So when I say, you can see that when I divide equally for all the 3, 4, and 5, for all the student equally divided with the chocolates, 3 chocolates, you can see that what is the mean value? So 15 by 5, 3. And what is the median value? The median value is sort this and take the center element. So center element is 3. See, 3. And what is mode? The number of repeated. So mode, this is median, and this is mode. So 3. So you can see that 3, 3, 3. Everything will be same. So it will be in the center portion where mean, median, mode will be same. So this is considered to be as normal distribution. So we may also have a particular diagram where the data is not normally distributed. So it can have like this. So it can have like this, where I'll be writing the mean value, which I have written already in the center, and you'll be having median and you'll be having mode. So mean, median, and mode. Now here, which is greater? So mean is lesser than median. Median is lesser than mode. So if you have this, then we'll say that it is negative skewness. So we may get the values like this. From the diagram, we can understand that it is left skewness. So that means the skewness is with respect to left side. So this portion is referred to be as skewness, and it is with respect to negative, towards negative. So when I move here, -1, -2, -3, and so on. So here positive, +1, +2, +3. And you can see mean, median, mode. This is the value. So when I write again with the diagram, so you may also have the chances of like this, where you will be having mean, median, and mode. So mean, median, and mode. So here mean value will be greater, median will be greater than mode. So this is towards positive. When you go here, it is positive. When you go towards here, it is negative. So it is positive skewness. The skewness is towards positive, we'll say it is positive. For negative skewness, the mean value is less than, equal, less than median, less than mode. Mean value, median value, mode. In positive, it will be greater. Mean value will be greater, median, and greater than mode. So whenever you have a particular data like this, you may get the graph like this. So graphical representation can also tell you about skewness and tell about whether it is not normally distributed or whether the data is symmetrical or non-symmetrical. So it will be understood. So this is the third moment, business decision. Now we also have fourth moment, business decision, that is kurtosis. So it has been mentioned as skewness. So kurtosis. So negative kurtosis, positive kurtosis, and if the kurtosis is 3, then it is normal. So when you are drawing a graph, again, you will draw saying that normal distribution, abnormal distribution. So I'll write everything in one single graph. You can see that. So when I write that the normal distribution, I'll be having a graph like this, where you'll be having mean value, and this is a range, where this is going to occupy 99%. And this will be 3 times standard deviation. So this is 1, 2, and this is 3. So this is a mean value. And this we call it as normal distribution. Now, I'll just write one more saying that there is a graph like this. You can see that the peak, you can see that peak. When you have a peak thin or sharper like cone like structure, you can see that this is positive kurtosis. So you can also have a graph something like this distributed, where you'll be having, this is not normally distributed and we call it as negative, positive. So the values will be different comparatively to this. For this, the sigma will be 1, and for the normal distribution it will be 2, sigma will be 2, and for negative it will be 3. So this we call it as kurtosis. So we also call it as platykurtic distribution. You can see that this is flat, the tip is very flat, and you can see that remains constant for some time and then get reduced. And positive is leptokurtic. So leptokurtic is sharp peak, thin bulged. So when you have thin, it is positive. When you have thicker and flat, then it is negative. So this gives you idea about the data which is not normally distributed or normally distributed. So moving to the next. So we have a different kind of representation for graphical representation: bar plot, box plot, scatter plot, line plot, histogram. So when I plot a graph, you can see that this is 1, 2, 3, 4, 5. So this is 2, this is 4, and this is 6, and this is 8. Let us assume that we have like this, and this is 1, and this is also 1. So it gives you that the first person, second person, third person, fourth person, fifth person. So they are getting the chocolates like this. So 2 chocolates, 4 chocolate, 1 chocolate, and he's getting 6 chocolate, and he's getting only 1 chocolate. So from this graph, we can understand something which is respect to the x-axis and y-axis, how it is related, and you can understand what is the values with respect to the change in the units, and it will be different. So box plot. So this is bar plot. So where you will be having a bar. And now box plot. So when I write a box plot, I'll be getting a value which is having a range and their particular median value, and this is range. So from here to here. Let's say example data have 5, 4, 3, 2, 1. So 1 is the least and 5 is the maximum and minimum range. So in this, you have a median value, you calculate the median value, and this will be equally divided. That is, these are the values first of, second of, and quarterly basis. It has been divided with the maximum range and minimum range. So this is how box plot is represented. So it can be representing also some of the values even after range, beyond the range. So we can refer to be as outliers. So I've told you extreme values. So extreme values are referred to be as outliers. So that is box plot. And scatter plot will give you how it is being distributed. Let's say example, you can see that these are the points. When I increase the value of x, y is also increasing, but not constantly increasing. Not constantly increasing. So this is scatter plot. How it is being scattered, it is giving you the idea. So line plot, you join these, you will be getting a line. Or else you can see that it is a line plot. The connecting from one end to the other end. So histogram. What is the use of histogram? Let's say example, I'll say there are 1, 2, 3, 4, 5. So there are particular rank. These are the ranks. The first rank, second rank, third rank, and fourth rank. So I'll be writing 10, 20, 30, 40, 50. 50 students are there. So I'll write here this one. So when I write this value, you may get 1.25 and you'll be having 0.5. So from 0.5 to 1.25, these many, you'll be having a marks of 20. So that means it gives you the frequency. How many people are scoring those marks? GMAT score. How many of them are going to score that particular value? So it is going to give this value. How many? So this is histogram. So this is how the data is going to understood with the help of exploratory data analysis. So now I would like to show you how the data has been explored for trade data or stock data, stock analysis. So it is going to reconnect. So I'm considering the Nifty index value, and I'm taking that value. So that contains the time series data, which is changing with respect to the time. So has some variations, and it is giving you the open, high, low, close, volume, turnover. So what is this all about, the graphical representation? So open means the price of the stock when the market opens in the morning. Close means the stock, the price of the stock is closed when the market is closed in the evening. Next, high is the highest price the stock reach during that particular day. And lowest price, low means is the stock which is traded on that particular day. Volume is the total amount of stocks traded on that particular day. So now we need to understand some companies shares will be keep on increasing and decreasing based on some criteria. Now we'll understand regularly the particular shares increasing. So let's say example 2019 to 2022. So there is a company TCS. What is their share market or capital market where you have investments? Okay. So in this range, what is the shares, whether it is increasing or decreasing, so that it will help us to predict, where it helps us to predict. Okay. So this is what we are going to understand, and this is going to help any investors, the fund manager who are looking, and those who are having money, and those who are looking for investing. So all those peoples are responsible in understanding these data. So I'll just give you a glimpse how it looks so that you can understand. So here I'm considering Nifty IT index. The value looks like this, and I'll be checking whether the data is having any null values. Null values means the cell might be empty. So here this could be no. Here this value will be empty, and here this value will be empty. If this value is empty, if this value is empty, so then I need to be cautious that the data is having completely without any missing values. So we should not have any missing values. If that is the case, then what is the use of finding the overall and making decision? So you should not have any missing value. For that, we calculate is NA and the total number. So when it comes to date column, open column, high column, low column, close column, volume, is there any? So it is showing 0 with all, then that means that does not have null values. So there is no missing values. So then next, I just need to explore again data. What is this data? So this data is all about calculations or the numerical value. So I just give to describe this particular data. So it gives the count. There are 248 observations, and the mean value is this for that particular column, and the standard deviation is this, minimum value is this, maximum value is this. So quarterly, half, and the other quarters, it is going to give you the values. So after that, I would like to plot the data with the help of plotting and the volume column. So I just need the volume, which is the amount of particular day. So you can see that it is all variation. It is having more variation. So it got reached sometimes, and it got reduced, again it got reached and it got reduced. Now it came down and then again it is going up like this. Now the current situation, it is again going up. So there is lot many variations. It is going up and again it got decreased, going up, again it got decreased, and now it is constant, again it is going up. So the trade is going to give us the details with respect to the variation in the time series data. So from the graph, we can understand the data well. So here I'm going to use histogram. So it is going to give that these many from here to here, it is going to have 60, or I'm so sorry, 65. And from 0 to this position, you'll be having all values with respect to 3 or 4. So like this, you'll be having range. This is a range. So from this, it is not so much clear that we understood anything about the data. So now we just go out and then update. So saying that the kernel density function or plot. So here you can see that it is neither not normal distributed. It is having something towards right, that is negative skewness. So it is negative skewness. Hence, it will show that the value, the mean, median, and mode. So mean is greater, median will be greater, mode will be least. So this is what we have come across from the data. Now, after this, I have one more with the data, the rolling, that is moving average method. Usually for time series, we'll be using these kind of plottings, or I can say call it as rolling. We can call it as moving average. So where the mean value will getting changed every time. So the mean value with respect to the time, it is getting changed, and it is getting decreased, and it is increasing, again decreasing. So from this graph, you can say that it is going down and it is decreasing. So when you study with this data, so nobody is going to invest in this particular shares. And we also have exponential smoothing. So where I'll be marking the particular graph what I got in the earlier by making it as smoother for 0.1. I can also do it for 0.01 Okay, so I just need to run from the first. So I'll run this quickly. You can see, go on seeing the data will get changed. So rolling, and you'll be getting here the data like this. So you can see that this is going to happen when you are smoothing the level. So I'll just do one thing. I'll just quickly go and change the 0.01 as 0.1. So you can better look into that range, which is having a smoothing level, which is giving a idea that it is got increased and decreased and decreased, and now it is decreasing. This is one way of one kind of plotting the data and representing it. So we also have one more to check whether the time series data is random or not. So by having lag underscore plot with the help of plotting. So plotting will take the data and it is going to plot. So it looks like a scatter plot. So this gives you idea that it is having more variations. So you can see that this is a region and this has more variations. So when you are going forward, it will be having more variations. So I'm talking about amount or the volume that you have at the end of the day. So autocorrelation. So we are just checking for the correlation between the volume and the other values. So we also have partial autocorrelation. So when you give a plot with respect to 10, 5, it will show you. So you can consider the pair, which pair you want to consider, whether 2 to 4 or 1 to 3 or 0 to 3. So you can just consider some of the things from this data. So these are all other kind of representation for the TCS stock market, Wipro stock market and Infosys for over a period of 14 to 19. So over a period of 14 to 19, the TCS is having more. Wipro is having more. The green color is Wipro and the orange color is Infosys, and TCS is having less. So TCS and uh, Infosys having the same constant. It is neither increasing nor decreasing. It is constant. Whereas Wipro having more constant, more variations. So from the representation and understanding the data, you can see that. So when you make a different representation with the legend, that you can see. So market capitalization, you can see this variation, and you can also plot with the rolling. So this is getting reduced and decreasing, and you have a scatter matrix, scatter plot. This is a variation, and volatile, whether it is normally distributed or not. You can see that blue, green, and or orange. So this analysis understands that the decision support can be created which stock to pick from industry for low risk, low gain, or high risk, high gain depending on the risk appetite of the investor. So it is helping the investor to decide to whether to invest or not. So it is giving an idea for a fund investor or a particular people, those who are investing their investment in that particular share. So this is how the trade analytics, before doing any model, before applying any model. So you are applying your exploratory data analysis skill. You are understanding the data first, and you are exploring what is data is talking about. So this is what important step that we do before model selection. So next we'll have a different models for this data, and we'll try to look into that, how model works on the data and gives us the decision or prediction or classification. So we'll try to understand models from tomorrow. So thank you so much for attending. So we'll meet tomorrow.